Hello and welcome to Inside ETFs. I'm Ramzan Karamali. Today we're looking at crypto ETFs with Aniket Ullal, Head of ETF Research and Analytics at CFRA. It's fair to say that the launch of spot Bitcoin ETFs in the US this time last year was a resounding success. BlackRock's iShares Bitcoin Trust, IBIT, amassed around $53 billion in assets under management in its first 11 months alone. That beat all previous ETF launches. The approval of crypto-friendly Paul Atkins as chair of the SEC has added to the optimism surrounding these funds. In fact, many analysts believe that funds linked to a variety of different types of cryptocurrencies could get the green light from the regulator. But is this optimism justified? Well, to help answer that and more, I'm joined by Aniket Ullal from CFRA. Aniket, thanks so much for joining us. Well, I said in my introduction that the launch of spot Bitcoin ETFs in the US was a success. Would you agree?
Ramzan, absolutely. I think resounding success is a great way to describe how the space has grown. There's a couple of ways to look at this. One is to look at aggregate flows and aggregate assets. If we look at all crypto ETFs today, that's both spot and futures, we have about $129 billion in this category. Just to put that in perspective, gold ETFs in aggregate have about 125 billion. So in other words, crypto has exceeded gold. Gold ETFs have been around for 20 years. So certainly this is an asset class that's grown significantly and one that investors are taking very seriously. Another way to look at this is how long did an ETF take to reach $1 billion in assets? At CFRA, we did an analysis of all ETFs launched in the last 10 years. And what we found is those ETFs that exceeded $1 billion in assets on average took 3 years to get there. IBIT, which is the iShares Bitcoin ETF, took 7 days. So just to put that in, if you look at those numbers, it's very clear that these are very successful products. And in fact, probably the most successful ETF product launch in recent history.
Now, Aniket, can you tell us a bit about the winners and losers of Bitcoin ETFs? I mean, IBIT looks like a clear winner, but how do you assess something like Grayscale's GBTC? It did see outflows last year after all, though it did perform very well.
I would say there are two clear winners. One is IBIT, as you mentioned. They've got about $53 billion in assets. That's one of their most successful launches ever. Fidelity is another company that's had success. FBTC, which is their ETF, has also crossed about $20 billion. So these two ETFs, IBIT from iShares, FBTC from Fidelity, make up more than half the assets in the spot Bitcoin category. In terms of GBTC, you're right. GBTC has had significant outflows. When it was a trust structure, before it converted to an ETF, it had about $40 billion. It's had this subsequently outflows of $20 billion. So certainly that I would characterize as having been one of the losers in this space. Although I don't like to classify them as losers for a couple of reasons. One is they pioneered the space. They really put pressure on the SEC through their lawsuit to convert these products into ETFs. I think they also unlocked a lot of value for investors by converting their product from a trust to an ETF. And they've recently launched a lower cost version of their own product. So we need to see how that kind of plays out. But overall, I'd say Fidelity and iShares are the clear winners. Grayscale has certainly had the most outflows.
So with potentially a less restrictive regulatory environment in 2025, what do you think we should expect in this space?
Well, there's really two things that drive Bitcoin. It's an asset class that's, of course, volatile. We can't value it using things like cash flows. So there's really two things to look at. One is rates, and the second is regulation. On rates, we know that lower rates favor, high growth or volatile assets like crypto. And certainly, we know rates are going to come down this year. At the same time, the pace of rate reductions probably will slow down a little bit compared to what we expected, say, 3 months ago. So depending on what happens with rates, that will, of course, affect Bitcoin and crypto. If we see more accelerated rate cuts, that favors Bitcoin. If rate cuts slow down, that's probably a bit of a headwind. In terms of regulation, as you mentioned, Paul Atkins is coming as the new SEC chair, replacing Gary Gensler. Chair Gensler was, I think, at best a crypto skeptic, even though we've had a lot of new products launched under his watch. But I think a lot of that was because his hand was forced. We've also seen a lot of regulation through enforcement under his watch in the SEC, particularly against companies like Coinbase. And if we see more regulation from Congress that has more clarity, or if there's more clarity around crypto regulation in the spot market, that of course favors ETFs. So overall, this is probably the most favorable environment for crypto from a regulatory perspective than we've had ever.
Aniket Ullal from CFRA, many thanks for your thoughts. And that was your look at crypto ETFs. I'm Ramzan Karmali, and this is Reuters.